One of the best kept secrets that first-time home buyers do not know is that they may be eligible for an annual tax credit of up to $2,000 a year. You heard me properly. I said tax credit, and I also said up to $2,000 a year. Not just for the first year, folks, but for every year they are in that home as their primary residence. This special episode of the Martini Mortgage Podcast is about the tax credit for first-time home buyers buying in North Carolina. But before I start unpacking this amazing program, let me make the legal folks happy. So, the primary purpose of this podcast series is to inform, entertain, and educate. The information, opinions, and recommendations presented in this podcast series does not constitute legal or other professional advice, opinions, or endorsements of any kind. Welcome to the Martini Mortgage Podcast, episode 172, which I'm calling Tax Credit. My name is Kevin Martini, and I am a certified mortgage advisor and producing branch manager NMLS 143962 with the Martini Mortgage Group at Gold Star Mortgage Financial Group Corporation and NMLS 3446 Equal Housing Lender. Let me be transparent. There are non-financial benefits to home ownership, and there are financial benefits to home ownership. One of the many financial benefits to owning a home and having a mortgage is the potential tax benefits. You see, when you own a home and when you itemize your taxes, you may be able to deduct the interest you pay from your taxes, and there may be other costs that you may be able to deduct when you're a homeowner too. Yes, it's like Uncle Sam paying for a portion of your mortgage. Oh, by the way, Uncle Sam does not allow you to deduct your rent from your taxes. Now, if you are a first-time home buyer, in addition to the ability to deduct your interest you pay, you may be able to be eligible for a tax credit. This tax credit is not just in place for the first year, but for every year that you're in that home. You heard me correct. I said the tax credit is eligible for every year that you're in the home as your primary residence. It's sad that only a limited amount of people will take advantage of this unique first-time homebuyer benefit that is reserved for people buying a home for the first time, and that home must be located in one of the 100 counties in North Carolina. Now, let's be frank. Many first-time home buyers qualify for this program, but not all first-time home buyers will be eligible. It is sad because this program provides massive value, not just for the first year, but for every year. Did you know that you can be a first-time home buyer more than once? You heard it correct. You can be a first-time home buyer more than once. If you think you're a first-time home buyer just once, you're incorrect. You can be more than once within your lifetime. The definition of a first-time home buyer is one that has not owned a home in the last 3 years. So, if you have never owned a home previously, obviously, you're a first-time home buyer. But if you have owned a home in the past 3 years, however, if you have not owned one in the last 3 years, you are a first-time home buyer again. With this nugget shared, If you are a first-time home buyer, you may be eligible for a tax credit up to $2,000 a year for every year you're in your North Carolina home as a primary residence. It is not an either-or situation. It's not a zero-sum game. In fact, it's a win-win proposition. Let me explain why I'm sharing this. If you qualify for the tax credit, you still have the ability to deduct the mortgage interest along with other things from your federal taxes. Yes, this is one of the rare times that one can double dip, and it's allowable. Since some may have questions about what's the differences between tax credit and tax deduction, let me do a Kevin Martini breakdown for you. In the simplest form, a tax deduction reduces how much of your income is subject to taxes. A tax deduction lowers your taxable income. So, for illustration, if you have a $1,000 deduction and you are in a 22% tax bracket, you save $220. Now, a tax credit directly reduces the amount of tax you owe, dollar for dollar. So a $2,000 tax credit lowers your tax bill by $2,000. Yes, there is a material difference between a tax credit and a tax deduction. Again, it's not either or. You can take advantage of both. This amazing tax credit offering is powered by a relationship that the Martini Mortgage Group at Gold Star Mortgage has with the North Carolina Housing and Finance Agency vis-a-vis something called an MCC. MCC is an acronym for Mortgage Credit Certificate. Now, you know who I am, but who's the North Carolina Housing and Finance Agency? Well, they are some great people that are self-supporting public agency that finances affordable housing opportunities for North Carolinians. The Mortgage Credit Certificate offers a tax credit. Again, a tax credit is materially different than a tax deduction. In short, the difference between a deduction and a credit is a credit directly decreases the amount of tax you owe, while deductions lower your overall amount of taxes. It's my opinion a tax credit is materially better than a tax deduction. However, do not fret. If you're eligible for a tax credit, you will also be eligible to take a tax deduction off your federal taxes, as long as you itemize. Please know, I am a certified mortgage advisor, our industry's highest distinction, but I am not a CPA. Also, you should always seek advice on taxes from your tax professional that you use. Now, the MCC that the Martini Mortgage Group offers in partnership with NCHFA is a tax credit and allows all deduction opportunities to remain untouched. If you qualify as an eligible buyer, you will receive a federal tax credit of 30% of the mortgage interest paid annually on an existing home. Again, if you qualify, and many of the families I work with at the Martini Mortgage Group do, one could save up to $2,000 per year on your federal tax liability. I know what you're asking right now. Hey, Kevin Martini, am I eligible for this? Well, if you're a first-time home buyer, and as we said earlier, a first-time buyer homebuyer is one that has not owned a principal residence in the last 3 years. If you are a military veteran or you are purchasing a home in a targeted area in North Carolina, you may be eligible. You must occupy the home within 60 days of closing, and your income and home price may not exceed certain limits. So every county in North Carolina, there's 100 of them. Each county has an income limit that the household income cannot exceed. And each county, all 100 of those North Carolina counties, has a sales price that you cannot exceed. You must be a permanent legal resident of the U.S. to be eligible for this mortgage credit certificate. So let me give you an example on how this thing whole works. Please understand I'm sharing this as an example, and this is simply for an audio illustration. On a $148,000 mortgage with an interest rate of, say, 4.5%, you might pay $6,660 in interest in the first year of your home loan. The mortgage credit certificate offered by the Martini Mortgage Group in conjunction with NCHFA would allow you to take a federal income tax credit up to $1,998. Now, how did I do that math? Well, see, here's what I did. I took that interest paid during the year, $6,660, multiplied it by 30%, because 30% is the amount that you're able to go ahead and deduct for the tax credit. And that also means that there's 70% left of the interest, and that 70% you could actually itemize as a deduction off your federal taxes. Now, again, here's the best part. You can get the benefit when you file the taxes, or wait for it, you can get it every pay period. That is correct. You can get this tax credit benefit in your paycheck every pay period. You see, several months after closing, you will literally get a certificate in the mail. Now, this certificate is suitable for framing, but if you elect not to frame it, you could take it to your human resources department and adjust your withholdings to compensate for the tax credit. Yes, if you do this, then your tax credit is immediate. Well, when I say immediate, after you receive the certificate in the mail and you have to wait for your next paycheck. Let me say this another way. If you are buying your home, you could save up to $2,000 of tax credit annually if you're a first-time home buyer. Now, the Martini Mortgage Group is located in Raleigh, North Carolina. Raleigh is located in Wake County. A family cannot purchase a home greater than $385,000. And a family of two cannot have a combined income greater than $110,000, or a family of three plus in Wake County cannot have a combined income greater than $126,000 to be eligible if you are using and wanting the tax credit in Wake County, North Carolina. Again, there's 100 counties in North Carolina, and every county has different limits. If you have questions about the county you want to live in, just give us a jingle at 919-238-4934. If you have questions about the mortgage credit certificate, just give me a jingle. Again, my name is Kevin Martini, and my number is 919-238-4934. In closing, is buying a home right for you and your family? I do not know. However, I do know that you owe it to yourself and your family to explore your options. Thank you for tuning in to this special episode of the Martini Mortgage Podcast about the first-time homebuyer tax credit. Please share this episode with someone you think that may benefit from the mortgage credit certificate. And always know, if you want trusted advice from someone that has a caring heart, I am here. My name is Kevin Martini, and I am a certified mortgage advisor, and you can reach me by dialing 919-238-4934. Looking forward to connect. Stay safe out there, and wishing you peace and blessings.